We're moving now to the U.S., where stock index futures were pointing to a slightly higher open on Friday as investors digest the latest in U.S. political news. On Thursday, Wall Street posted strong gains, ending the session on a positive note after U.S. companies announced that they would spend the tax bill savings on higher wages and new construction. Meantime, the House of Representatives voted on Thursday to advance a short-term spending bill in order to fund the U.S. government through until the middle of January. Aside from politics, trade is expected to be slightly lighter than usual as investors get ready for the holiday season. Equities are set for a full day. However, other markets such as foreign exchange and livestock options are set to close early. Ahead of this, a whole slew of economic data are set to be published on Friday. First off, personal income and outlays and the Philadelphia Fed Non-Manufacturing Business Outlook Survey are due out at 8:30 a.m. Eastern Time. Now, this data will then be followed by new home sales and consumer sentiment, both due out at 10 a.m. Eastern Time. The Kansas City Fed survey will then be released at 11 a.m. Eastern Time. No earnings are expected to be published this Friday. Now, my colleague in New York, Jill Maladrino, will be joining us later on the show to tell us more about what the new tax bill means for Americans and the market. In the meantime, we move on to Asia, where markets closed mostly higher in the last day of trade before Christmas, tracking moderate gains made on Wall Street. Japan's Nikkei 225 rose 0.16%, with gains seen in trading houses and most financials, while automakers and tech traded mixed. Across the Korean Strait, the Kospi tacked on 0.44% to close at 2,440.54 as blue chips that had fallen in the last session clawed back gains. Samsung Electronics closed up 1.14% and Hyundai Motor rose 2%. Meanwhile, Australia's ASX 200 edged up by 0.15% to close at 6,069 points on strength in the resources sectors. The Hang Seng Index advanced 0.32% as tech shares led the index higher. Mainland markets closed mostly flat, with the Shanghai Composite closing lower by 0.08% at 3,297. The Shenzhen Composite lost 0.18% to finish at 1,901 points. Energy stocks were among the top performers on the day, while banks and financials recorded slight declines. And back here in Africa, South African investor Wiese has sold an additional 1.1 billion rand of shares in supermarket group Shoprite after his exposure to scandal-hit retailer Steinhoff dented his fortunes. More than $14 billion of shareholder value has been wiped off Steinhoff over the last 3 weeks after the owner of mattress firm and Conforama discovered what it called accounting irregularities and parted ways with his chief executive. The 90% collapse hit Wiese's wealth, estimated by Forbes magazine to have dropped to below $1 billion, the hardest as he is the largest Steinhoff shareholder with a stake of about 20%. Exchange filings showed Wiese sold 5 million shares at an average price of 221.5 rand each in Shoprite, a 128 billion rand company in which he owns about 17% stake and is the chairman. That brings the money he has raised since December 14 from the sale of Shoprite stock to 3.3 billion rand. And South Africa's power utility Eskom, which has been embroiled in a governance crisis, has postponed its interim results announcement until early next year. Cash-strapped Eskom, the sole power supplier in Africa's most industrialized economy, has struggled after a leadership crisis and has been at the heart of allegations of illegal contracts and undue influence in awarding tenders to the Gupta family, friends of President Jacob Zuma. The scandal-plagued power utility said it needed time for its newly appointed board members to review financials and to review the impact of a new electricity tariff increase, but did not give a specific date for the release of the results. A new Eskom board was approved by Cabinet earlier this month, with the Public Enterprises Ministry, which oversees the utility, adding that it should take decisive action to address governance issues. And Canada's trade financing agency, Export Development Canada, has scrapped a deal to help finance the sale of a Bombardier Incorporated jet to the wealthy Gupta family in South Africa. The Guptas failed to meet loan repayment obligations in recent weeks, and with the EDC assessing a political exposure risk, it terminated the loan, which allowed Canada's Bombardier to sell a global 6,000 jets to them. Under a December 2014 agreement, the Canadian government's export agency was financing 80% of the 52 million Canadian dollar cost of the aircraft. And with some mining companies increasingly reluctant to own outright the infrastructure that keeps their projects going, an African development institution is linking up with investment funds to help fill the gap. The Nigerian-based Africa Finance Corporation has already expanded its debt or equity funding for resources projects from oil into mines, including a bauxite scheme in Guinea. Now it is testing the water on a modest scale with investments that separate infrastructure such as power supplies, roads and railways from the mines themselves. Some miners remain keen on controlling these facilities, notably producers of bulk commodities such as iron ore. Others, however, have been selling off such assets or seeking partners for new infrastructure to limit their huge capital. And when we come back after the break, we'll take a look at what the U.S. tax bill means for Americans. To stay with us.